Understanding the pulse of your portfolio is the key to being able to make the right decisions at times of fear and at times of greed. Having control and having optionality is how you survive the times which markets are trying to create panic. They're trying to create excitement at times when you should probably be scaling back and trimming your portfolio in different sectors. Now, in this video, I'm going to go through some macroeconomists, some key opinion leaders who have had experience in particular with crypto, and just go through how I've allocated as a result of this. And just the greater lesson in this is just being able to say, at the end of the day, I am comfortable with whatever direction the markets take. I've positioned myself so that I can handle a pullback. I can handle the markets moving higher. I can cater to the more speculative part of my brain that's trying to get me to take on even more risk at these times of excitement. And so in this video, I'm going to show you my portfolio, just going through the names that I hold, and then also just go through the key opinion leaders and how it's helped me frame my decisions over the last few weeks. It's a constantly adapting situation, and managing a portfolio should be something that you take actively and you understand and you check the narratives and you check your thesis. So with Bitcoin showing real weakness and the traditional 4-year cycle coming to an end, I'm still very bullish on the long term of Bitcoin. I always have been. And I'm also bullish on layer ones like Solana. However, there is weakness and the next direction is unclear and uncertain. So I just want to go through some of these key opinion leaders, some of these macroeconomists that I trust, and just give you an idea of why I've positioned the way I've positioned. And this has been over years of slowly rotating into the sectors that I knew hadn't really moved yet. And the main name that I hold, and you'll see how silly the allocation size is for my Tesla position, but it's the main position that I hold because I believe heavily in the real hardware agentic AI that Tesla are creating. And these product lines really will deliver free cash flow going into 2027, 2028, and 2029. I want to start off with Julian Bittle, who's a macroeconomist, and he puts up this really profound post, and it's really insightful. And he's someone who has put so much work and so much data points into the decisions that he makes. And this post and this tweet, even though it's quite simplified, it's going to cover so many different data points that he has considered. And that's why he's able to put his neck out and really understand that this could be a very contrarian view at this point. The only way to survive this kind of volatility is to extend your time horizon. When you think in days or weeks, every move feels like life or death. When you think in months or years, it all fades into noise. Once you start fighting volatility and start to embrace it as a feature of this space, everything changes. Volatility turns into opportunity. It's a gift that lets you add to your conviction. Our view remains that Q4, once the dust settles, will be bullish, and we've done a ton of work to support that view. And that manifests in this bullish megaphone pattern that Julian Bittle has managed to draw out. And it shows on the daily that Bitcoin is just testing the lower bound of that bullish megaphone. The Bollinger Bands have compressed to a point where usually when they get this low and they deviate to 22, it's the moment that they are like a beach ball underwater and they spring up. And that's usually when the volatility comes back to Bitcoin and the prices go higher. And on this logarithmic trend line, you can see that it's just hitting that green, that 2 standard deviations from the mean, which is always a good time to add to your conviction. So what I believe Julian Bittle is saying in this overview is that he's still bullish into Q4 and he's still bullish into 2026 Q1. Now, what I believe Julian Bittle is saying that is Q4 could still be bullish for Bitcoin and also crypto more broadly. But also that Q1, as the ISM hasn't started to go past 50 and the rate cutting cycle hasn't really truly started meaningfully, that he thinks that Q1 and Q2 in 2026 could also still be bullish. And although I take what he says seriously, I use it as a part of my decision making, not the complete and true execution of what I'm going to do. So for me, it's kind of factored into the decision that I made. And when I reveal the portfolio positioning, you'll understand how I've positioned and taken his advice, as well as the many others that I'm going to show you now. Now, moving on to Bob Lucas, who has been in crypto for nearly every cycle. He talks about other aspects of the market as well. Stocks dipped past week after a very extended run. It's more than overdue after 3 to 6 weeks of sentiment clearing decline. That would set up a new cycle that can sustain a push into Q1 2026. But it showed fight late last week. I think if it pushes again to all-time highs during a shutdown, then it's not fundamentals but pure speculative animal spirits. The move would become a significant outlier and a signal and a runway that markets heading for a Q4 cyclical 4-year cycle top. So what he's saying here is even during a government shutdown, the animal spirits of the market and the seasonality of the market is still playing out. And that a part of his thesis is that this could continue into Q1. If during a government shutdown there's still speculation, then once that government shutdown is over, there's going to be a lot more confidence returning to the market. And there's still so many different aspects of the macro that still haven't yet come to fruition. You've got the China trade deal with the US, and you've got the rate cutting cycle. So what I think Bob Lucas is saying is that it's always important to have an allocation in the market, but to start to think about how do you monitor the pulse of your portfolio so that you're able to benefit and take advantage of the fact that we're at very good levels here, that these aren't bad levels to take profit. These aren't bad levels to trim your portfolio and start to build up cash to put in a money market. So really understand that what do you feel most comfortable with, and start to understand that this is a good level to take profits. All-time highs for the S&P, for the NASDAQ, for the Dow Jones. Most of the tech companies are pushing all-time highs or past all-time highs. It's been a very good run since April. That low has set up a really good, on average, about 26% for the S&P. Moving on to Chris Beninsky, someone who has managed to call the prior cycle top perfectly. And this is a long post, so I will go through it, but it's important to really understand that this just frames part of my decision-making. Increasingly convinced, last Friday's massacre broke crypto for a while. Hard to quickly develop a sustained bid after such a meltdown. This cycle has been disappointing for most, which can paralyze action as people hope for bluer skies or former all-time highs. It's easy to get caught up in chart minutiae, but when looking at Bitcoin and ETH in linear monthly, it reveals we're still in elevated range, although showing cracks. If you're thinking of taking profits, MicroStrategy is slipping, gold is sending a warning, as are credit markets, and stocks will be the last to get the message. We can always get another weak bounce, but I've taken action accordingly. Remember, it's never all or nothing when raising cash. I want to see how Bitcoin responds to 100,000, but will likely get interested in the market again when I see Bitcoin 75K or lower. This bull was different, and the next bear will be different too. This is a really profound post, and it really sat with me for a few days. Raising cash is never a problem, especially at these elevated levels. You're never going to regret taking profits. But also, you can't be too certain what's going to happen next. And if there is a bounce in Bitcoin and in crypto assets, it's not truly going to be real until it goes past the all-time highs and starts to change the structure and starts to create an uptrend. Ivan on Tech, someone who's been in crypto since 2013, so he's managed to gain real experience and a following, and he's managed to predict prior tops using his Moneyline tool, which looks at Fibonacci levels when they break down. It's usually reclaiming them that can signal whether we're going to continue higher or we're going to break down further. Good evening, crypto. As I said in the stream yesterday, 8th of October, and today, I'm not a fan of the Bitcoin fake out. Moneyline on daily turned bearish after the fake out. Bear risk is increased. Most people are complacent. What he's saying here is he follows a very specific and disciplined tool that he's created. And this optimized trend, when it turns bearish, it usually stays bearish. And you can't go to all-time highs with any asset unless the trend is positive. So what he does is he waits. He doesn't get faked out by momentary hourly candles that go higher. He just waits for that trend to change. And if it changes on the daily, he's going to go back to being bullish. And I take, again, part of what he says, and I include that in my decision-making. Going back to Bob Lucas, the Bitcoin 4-year cycle uptrend portion still stands. But complacency here is dangerous. Warning signs are mounting, and the market feels heavy. We're at a decisive moment deep in the cycle. We're deep into the cycle of what's traditionally been a 4-year cycle, pre and post halving. There's an amount of time where Bitcoin has its move, and also then it goes into altcoins. That's not quite happened. the way it traditionally would have played out. And what Bob Lucas is saying here is, again, just trim, take profits, start to raise cash. Don't fully leave the market. That's too binary. It's too simple. You just have to be able to go, okay, I'm comfortable with any decision that the market's going to take, because it's always going to try and create max pain. What's the decision that's going to make my portfolio battle tested and able to handle an upswing or a downswing? And then going back to Chris Beninsky, there are smart people with good reasons who lean bullish here. There are also smart people with good reasons who lean bearish. No doubt it's a divided market. I'm 39% free cash in money market funds. I'm 61% long capital, and the capital includes assets outside of crypto. This aligns with my intention below of staying majority allocated to my favorite assets with capitalism, despite being cautious in the short to medium term. This is an extremely important point that really resonated with me. Again, as I take all of these different people seriously, I start to factor in my own experience. And where I've felt more comfortable is where I have the ability to have optionality. And so my decisions now are starting to, as we get into these more euphoric times and I see that the assets that I hold are in profit, I'm going to start to raise cash. And I haven't quite done that to the extent that I want to, but I'm still building every single day. I'm still taking some cash and raising that safety part of my portfolio and just becoming more defensive. And it's just that simple. And then the final person that I want to show is James E. Fawn, who gives a macro outlook for the next few years. S&P 500, 7,000 for 2025. Yes, S&P target for 2026 is 8,000. Yes, S&P 500 target is 14,000 by the end of the decade. Yes, gold target is still 5K. Bitcoin target is still 200K. The federal fund rate heading to 2.75%. No AI bubble yet. Have a nice day. His view is over the next few years. And so within the next few months, you can't know exactly what's going to happen and what's going to play out in the seasonality. But what he believes is with this administration, with the monetary easing cycle starting to begin, that these markets with AI truly making a meaningful difference to the GDP, real GDP of a country, the economic efficiency is going to start to increase and improve. Innovation is going to start to increase and improve, and it's going to impact all aspects of our lives. So he believes that all of these are going to be positive factors that lead to the S&P index going a lot higher. So how could all of this be relevant? I'm going to just show you my portfolio. It's just simply the percentages. You're not going to see the amounts. It's just the percentages. And you'll see how I've truly used rotation to build up different positions outside of crypto, because my portfolio in 2023 and early 2024 was about 70% crypto, Solana and Bitcoin together, and a few altcoins. Since then, I've been rotating those profits into Tesla, and I've been rotating those profits into other companies that I like. And this is where you always need to be. You need to be thinking about the next few years ahead, not where you currently are, taking that profit and rotating it into the next company that hasn't yet moved. So you can see here, I'm 60% Tesla because of the fact that this is the company that I understand. It's not about showing you my opinion, it's about showing you my position. So you understand that this channel talks about Tesla a lot because Tesla is where I'm heavily allocated. XPeng, because they've got extremely good revenues, they've got great vehicles, they're starting to bring positive EPS and net shareholder income to the holders, and that's another reason why I'm invested in XPeng as a hedge to EVs in Asia. I've got my S&P 500 index, which is basically a money market fund. I've got a Sol trading account, which is just where I use leverage, and that's very speculative. And if that goes to zero, it goes to zero, but it's where I take on risk, and I just kind of give in to my degenerate reptilian brain. Then I've got my cash, which is at 4.1%, and I want to try and get that to 10%, maybe even higher at 15%, because I currently need more cash in my life as I am getting into these periods where I want to start taking some lifestyle chips off the table and enjoy traveling and enjoy going to different places. This is another mindset that you should take. I've got SSK, which is a staked Solana ETF. So basically the yield that you get from staking Solana, I do it through the ETF because it's more liquid. And then I've got cold storage Solana, which is just pure form Solana. I've got pure form Bitcoin, which is again on my ledger. And then I've got 1.4% allocated to NVIDIA. My allocations reflect where I am most bullish. I'm more bullish on AI and the hardware that Tesla are going to produce with the Cybercabs and the Optimus and the energy deployments than I am on the money that is going to be captured from crypto, the money markets that are going to be captured from crypto, the finance sector generally. I just am more bullish on AI. So that's where my portfolio has been heavily pushed towards those sectors. So I'm going to finish off with this final meme. Again, how markets can just be so difficult to anticipate. You've got Baron. This is AI generated. It's not real. I'm up 90 million on that short. Time to go long. Can you tweet again, Dad? Trump. Don't worry about China. It'll all be fine. Xi just had a bad moment. It's so important to realize that whenever the most capitulatory event happens, it's usually the bottom. The market might trend into that kind of bottom for a while, but it usually is the bottom and then things go higher. I don't know exactly where things are going to go. I never will know where things are going to go. I have a long-term time horizon with companies that I love. Tesla, I believe in the future of Tesla. I love Bitcoin as a way of just protecting my energy as it can't be inflated. It's the most scarce asset that I've ever come across. I love Solana for its ability to just be so easy to use, especially when you're using decentralized exchanges to do perpetual trades. It's the perfect platform and it's fast. It's got great finality. It's got great TPS. It's just extremely easy to use for the user interface. XPengs, it's going to start to bring a positive net shareholder income in the next 2 quarters. And then I've got NVIDIA just as the main leader in the semiconductor space. I've got VUSA as a S&P 500 index just to track the index and always be allocated to that just basket of companies. And then also I've got staked Solana and I've got some cash and I'm trying to raise the cash higher. Hope this helps. Hope this gives you an idea of just the fact that your portfolio should reflect how you feel. You should understand everything that you own, and the size that I have in position with Tesla is a reflection of how much I understand this company and how bullish I am on this company. If you aren't, you can't hold a position that's 60% of your portfolio because it'll just be irresponsible. But I'm irresponsibly long with Tesla. I can understand and handle the downturns. I don't really mind. So hope you got some value from this. Videos are going to be just when I feel like I have something valuable to add. This channel is not about growing subscribers. I'm never going to monetize it. I don't care about that. It makes no difference to my life. If I did it, it wouldn't be materially impactful in a positive way to monetize the channel. I'd rather just be able to speak on concepts that I believe in and share ideas and share what I'm doing to those that are interested. So like, comment, subscribe, and I'll see you in the next one. Goodbye.